The next question becomes, which asset should you trade? After all, there's so many different asset classes to choose from, such as stocks, futures, options, crypto, bonds, and even Forex. I would advise you to choose wisely because the wrong choice can actually do more harm than good. In order to pick the most profitable asset to trade, you need to ask yourself the right questions, and it's just 3 simple questions. Firstly, what is your financial goal? If you want to make quick profits and get in and out of the market fast, you can consider assets that are more volatile like crypto, stocks, Forex, or even options. On the other hand, if you are looking to build wealth over time, you should invest in less volatile assets like bonds and low volatility stocks. And the thing about stocks and crypto is that you can choose to trade them or invest in them for capital appreciation. Once again, it's really up to you. The next question is, what's your risk tolerance? The general rule is that the more risk you take on, the more money you can potentially make or lose. High-risk assets are cryptocurrencies, options, and futures. Moderate risk assets are stocks and Forex. Low-risk assets include bonds and dividend-paying stocks. If you are a beginner trader, I would advise you to stick to moderate risk assets because they offer just the right amount of trading opportunities. The third question you need to ask yourself is, how much money can you afford to lose? Now, this is not the same thing as how much money you have in your bank account. You should only trade with money you can afford to lose, and it's usually your disposable income after paying your bills and day-to-day expenses. If you're planning to start trading with less than $1,000, stocks, Forex, and crypto will be the most suitable for you. You can actually start trading these assets with as little as $100. On the other hand, if you have more capital, you can consider trading futures and options. Now, you might be thinking, okay, cool, Brad, I still don't know which asset to pick. Should I trade crypto, stocks, or Forex, or what? Now, I'm going to give you an answer that you might find controversial, but it's really not. It's simply the reality. You should not trade cryptocurrency because it's way too volatile and unpredictable. You should not trade futures and options, especially if you are a beginner, because they are more complicated and require a larger investment. You should not trade bonds because they move way too slow. It makes a good investment, but it's a bad asset to trade. And that leaves us with stocks and Forex. Now, as a beginner, you need to find something that fits into your schedule and obligations, that is not too risky but not too safe. And it allows you to start with as little as $100. And that's exactly what Forex trading allows you to do. Right now, you might be wondering, why did I choose Forex over stocks? There's actually a few reasons. Firstly, the Forex market is open 24 hours a day, compared to the stock market, which is only open for a fixed amount of hours per day. This is a huge upside because I can trade at any time that I want. Back when I was working a 9-to-5 job, I usually used the time after work to trade Forex and make some side income. My philosophy back then was to use the 9-to-5 to pay the bills and 6-to-12 to build my trading empire. So this is really the main reason why I love the Forex market so much. With Forex trading, you can start with as little as $100 because most Forex brokers out there offer high leverage. This allows you to trade with a larger position using a small amount of capital. Now, note that leverage is a double-edged sword. It increases both reward and risk. That's why we don't recommend you over-leverage your account and try to flip like your small $50 account into $1,000, even though it is possible. The Forex market is the most liquid market in the world, meaning there are a large number of buyers and sellers looking to make a trade at any given time. The daily trading volume is $5 trillion in the Forex market, making the stock market look embarrassingly small. This means that over $5 trillion of currency is converted by individuals, companies, and banks every single day. This high liquidity allows transactions to be completed quickly and easily, which allows you to buy and sell anytime. Now, another benefit of having high liquidity is the low transaction costs and fees. Nowadays, many brokers don't charge any commissions for Forex trading. However, there are other fees like bid and ask spread and rollover fees. But honestly, you won't really notice them unless you trade very frequently or you trade with a large size. Now that you understood how lucrative Forex trading is, you might be thinking, wow, since I can make money 24 hours a day, I'm going to become a millionaire trader in 1 week and quit my job. Now, don't let these benefits fool you, because Forex trading is not as easy as it seems. Let me tell you about the popular 90-90 rule in the trading industry. It states that 90% of retail traders lose 90% of their money in the first 90 days. Whether that's actually true or not, I have absolutely no clue. But here's the thing. A few years ago, it became mandatory that Forex brokers disclose publicly the results of their clients on their website to warn new traders about the risk of trading. That's why nowadays when you go to any broker's website, they show you that majority of their clients actually lose money. Now, this was supposed to prevent more people from getting into trading, but that obviously didn't work. Just like how those nasty pictures on cigarette packs don't stop smokers from smoking. In fact, trading became even more popular in the recent years because everyone thinks that they can beat the statistic and become part of the top 10%. So, how do you actually overcome the odds and become part of the top 10% who makes money on a consistent basis? So you can live the life of your dreams just like I do. Whether that's staying in a $10 million penthouse in Dubai, enjoying the sea breeze on a yacht, or just taking the Rolls Royce to dinner because you don't feel like driving a Porsche today. Or even simple pleasures like bringing your mom to lunch on a Monday and enjoying the beautiful sunset with your loved ones. Now, I'm going to review the secret that allowed me to be part of the top 10% of traders. The secret is do what others don't to get results others won't. So basically, just don't do what the 90% is doing. This might sound simple, but it's not easy. Hear me out. When you go online to search for free information on how to trade, this is what you will get. They will teach you how to trade using retail trading concepts, which are support and resistance levels, trend lines, candlesticks, and chart patterns and indicators. What if I tell you that all these retail trading concepts, which can be found online, are rigged against you and are designed to cause you to lose money so that they can make money? These guys are the institutional traders who are managing billions of dollars in trading capital on Wall Street. They are the ones who are profiting from your losses. It's because of the fact that trading is a zero-sum game, which means when you lose, someone out there is winning. And if you win, someone out there is losing. Since majority of retail traders lose money, they are essentially transferring their hard-earned money to the professional traders who actually knows how to trade. And this happens every single day. Now, looking back, I realized that I only became profitable after I started to act and think like a professional trader. This was the pivotal moment where everything finally clicked for me. Right now, I want you to think about how much money you want to make from trading per month. Whether that's $5,000 per month or $10K a month, and then write it down on a piece of paper. And if you watch till the end of this video and you apply everything you learn, the number right in front of you will become your reality. However, I hate to break it to you, but right now you have 0% chance of achieving your goals. The biggest mistake most people make is to aim for the goal itself. Instead of aiming for the goal, you should aim to become the person who is capable of achieving the goal easily. Now, the problem is there is an invisible barrier between who you are now and who you need to be to achieve the goals that you want. Here's what I mean. This was me back when I was 18 years old. I was broke and I was lazy, I was binge eating, I lacked ambition, I was comfortable, I was weak physically and mentally, I was a losing trader because most of the time I'm trading with my emotions and I have absolutely no clue on what the hell am I doing. And then this is me now at 22 years old. I'm disciplined, I'm focused on a mission and a purpose, I'm grateful but not satisfied, I'm hungry for more. I'm a multi-millionaire, I'm scaling to 7 figures in trading capital, I'm teaching millions of traders worldwide, and I've over 1,400 plus happy and successful students everywhere in the world. Now, what changed over these past 5 years? If you look at my face, I look very similar, my name is still the same. The main thing that changed was my identity. This person wanted to become a consistently profitable trader, but it was impossible for him. But it's easy to make 6 figures trading for this person, but it's difficult for this person to make 8 figures trading. I have to transcend into a new version of myself if I want to accomplish this new goal. Understand that you cannot achieve your goals and desired reality unless you become the person who can. Success is not something you chase. It's something you attract by the person that you become. Right now, you have greatness within you, but it's been papered over by limiting belief, by doubts, by distractions, by a false identity. It's time to rip those papers down. It's time to shed the old you and transcend into the new you. It's time for you to transform from a losing retail trader into what I like to call an outlier. The outlier is a professional trader with an institutional edge. They make a ton of money consistently, manages his money wisely, and gets paid to live life on his own terms. In order to become an outlier who make consistent profits, you have to master these 3 keys. The first key to unlocking generational wealth is to have a mechanical trading strategy. The keyword here is mechanical. Before we talk about what to do, let's look at what not to do. Or rather, let's look at how the majority of retail traders actually trade. They try to predict the market on where the market is going to go next. They hesitate to take a good trade setup after a string of losses. They regret not taking the setup after it has already played out. They enter trades too early or too late because of their emotions. These rookie mistakes cause their losses to outweigh their profits. As a result, they struggle to be consistently profitable. This is the result of trading with discretion, rather than using a set of clear defined rules. When you are trading this way, you don't know exactly what you are looking for on the charts. Let's say you open up a chart on Euro USD, which is a commonly traded Forex pair, and you are trading based on discretion. There's so many factors that you have to take into consideration because you don't have a plan. Should I buy or should I sell? What price point is ideal for entry? Should I use a limit or market order? Okay, let's say you entered for a buy. Now what? How do you manage your open position? Where to get out if the trade does not work out? Where to take profit? And many other questions. Now, the market is already filled with uncertainty. So if you still don't have a proper plan and structure, you're just gonna get destroyed by the professionals. So what is a mechanical trading strategy? And how are these strategies turning losing traders into profitable traders? A mechanical trading strategy provides a clear set of simple and statistically proven rules to follow. It's essentially like a checklist that you go through every single day to determine whether the trade is worth executing or not. Here's an example of a simple mechanical trading strategy. I will buy when price mitigates a demand zone, and then I'll place my stop loss below the demand zone and take profit at the nearest swing high. When you have such clear rules, you're not lost when you pull up your charts because you know exactly what you're looking for, which in this case is to just wait for price to mitigate your demand zone. The result is that you're able to trade with confidence without needing to guess where price is going to go or rely on your gut feeling too much. Your mechanical trading strategy will be the one that's doing all the thinking. It will decide which trades that you should take regardless of how you feel or current market conditions. And this allows you to be consistent in your trading and as a result get consistent profits. Now, if you want to fail at trading, just trade with your emotions. When you start losing trades, you will doubt whether or not your trading strategy actually works. When the next trading opportunity shows up on a chart, you hesitate because you just lost a bunch of trades. And then an hour later, you see that the trade had just played out the way you thought it will. But guess what? You were too scared to enter into the trade. So now you sit there in regrets. And then you start getting angry at the market and take a bunch of low quality trades to make back the money that you have lost. And you end up losing even more money. This is the fate of the masses. And this repeats over and over again until you eventually quit trading. Now, if you want to succeed, use a mechanical trading strategy. Test it out in both simulated and live market conditions and then gather data to back up your strategy to prove that it works. When you do this, you gain confidence in your own trading ability and plan. And then when you combine this with a professional trading mindset, you will start seeing consistent results. This is when you can start scaling your trading to 6 or even 7 figures, eventually becoming a top 1% trader, aka an outlier. Now, in my experience, the best trading strategy is not 100% mechanical. It's 80% mechanical and 20% discretionary. It's important to still rely on your human judgment and gut feeling sometimes, especially when you have gained years of experience in the markets and you have developed great pattern recognition skills. Now, if you're a beginner, I will still advise you to use a 100% mechanical trading strategy until you gain more experience. When you use a mechanical trading strategy, trading becomes as simple as ABC. If there is a trade setup that fulfills your entry criteria, you take the trade without hesitation, reservation, or fear. If there isn't a trading opportunity, you stay out of the market. As time passes, you will be able to identify the flaws of your strategy so that you can continuously tweak and improve it. And remember, you don't need to know what will happen next in order to make money. You just need to be in the markets when a trade setup aligned with your plan presents itself. In terms of the traders I worked with in actually doing this, let's look over a couple of real-life examples. Let's begin with Alia, who was unclear on when to enter and exit the markets effectively. She was using the usual technical analysis methods which are not profitable, and she was struggling to make money trading Forex. She'll make small profits and take large losses, sometimes due to emotion. She then started implementing our mechanical trading framework, and 2 months later, she's banking multiple winning trades with high risk to reward, one after other, making over 25.6k with zero thought or stress or emotion. Next, Samudin, who made over $20,000 trading after working with us for just 3 months. Now, trading hasn't always been this easy for him. He was constantly losing money, blowing accounts after accounts a few months ago because he did not fully understand how the market operates. He also could not develop his edge in the market properly since the majority of the trading advice online is low quality. After learning about our proven mechanical trading strategy, he gained extreme clarity and confidence in the markets and became a consistently profitable trader in his first year of trading, as you can see on the screen. Our mechanical system has allowed countless of students to not only get funded and bank consistent profits, but also scale their trading accounts to 7 figures and beyond. Now, you must understand that your sole goal as a retail trader is to follow the smart money footprints because they are the ones that have the ability to move price. And that is why our strategy is built upon following institutional money and by being a reactionary trader to trade this activity. In layman terms, I basically want to know where smart money has entered into the market and where they are going to enter again, so that I can jump on board and ride the big money like this example over here. Now, if you want to learn more about the proven mechanical trading strategy that made me over 6 figures, watch till the end. The second key to becoming an outlier is to have a solid capital management plan in place. Now, what's the point of making money when you can't keep it? I've seen so many traders who are able to make a lot of money, but they